Christopher Inks. I'm asking you to unmute.
Yeah, there we go. I was trying to get that
Chris.
done.
Hey, it's been a long time.
Yes, sir. Man, a lot of stuff's happened since the last time we talked. How you doing?
I'm doing good. What's on your radar, and how's the war
Oh
been
man,
treating you?
I'll tell you. I'm doing all right. Nothing really coming in that we didn't kind of expect really. I don't know. Can y'all see the charts here?
Yeah, we have Bitcoin here.
Okay, yeah. So again, something I've tried to explain before. I'm not a believer in this idea that that the charts kind of tell you what everybody's going to do. I think in the respect that people react off the charts other than a knee-jerk reaction, right? So my belief, is this idea that social mood and the way it happens is reflected in the charts, and so I think most analysts end up asking questions backwards, because it's that social mood that leads to what's happening. So if we talk about the war and what's going on with Russia and Ukraine, you look at the fact that Russia, its stock market hadn't been doing all that great. And, so, when the stock market's doing poorly for a long time, social mood is down, and that usually will lead to war,
Okay.
And so we get that. So, really what's happened here, in that respect really isn't surprising at all. Gold and silver popped up a bit higher than I thought they would. Oil always had that
bearish long
possibility.
term on those, Chris?
Excuse me?
You still bearish precious metals long term?
I am. Now there's a possibility that, maybe this year-long range that we've been in. Let me kind of pull up one real quick here.
All right, let me look at, I want to talk to you about Bitcoin, though, before you leave.
All right.
All right, so it could have been a seminal moment in the market by seeing what sanctions can do to be able to freeze assets anywhere, even a central bank.
Yeah.
I don't know if the U.S. government or any government has the ability to freeze Bitcoin accounts. So a lot of people are saying this is really another reason for going to Bitcoin and going to crypto. And one of the, maybe I shouldn't say it, it's a family show, but the lead singer from Pussy Riot, who was jailed by Putin, and she has a fund, and they're funding it with crypto rather than currency because they don't want to have it seized. If we could do it, maybe Russia could do it. So is this a real seminal moment for Bitcoin where people won't trust the banking system because of how assets were frozen?
I'd like to believe that. I don't. I'm not a big fan of centralized government and whatnot. Just because it's going to lead to what it leads to. Historically, always. Every government fails, and it all follows the same path generally. So central banks and banking in general becomes the main force through which this usually ends up happening. But honestly, I think most people really don't care. Especially here in the U.S., people here in the U.S. were so removed from the rest of the world. We think the world revolves around us, and I think people want to believe, that the government's going to do this and that for them, and so they just kind of turn a blind eye. And I don't really think it's going to have that kind of effect there. Now, the thing is, can they freeze your wallets? If you're holding them yourself on like a Ledger or a Nano or something like that, no, they can't freeze your wallet. But what can they do? Well, you've got people like Coinbase and all these other, Kraken, all these other on and off ramps, and they can, remove your ability to get your crypto off there. They can make it painful for anybody to deal with you outside of the, the exchanges and whatnot.
I see.
So I don't know that it's really, all this great savior that everybody seems to think it is. I've been believing for a while now that we might have talked about it before, that Bitcoin actually and cryptos actually make it easier for government to track you, make it easier for government to kind of keep that control that they need over you. So
that's why they want to develop their own, right?
Yeah. That was always the thing. The central banks coming out with their own and whatnot. Everybody's like, oh, Bitcoin's going to be everybody's going to take on Bitcoin. It's going to be the reserve currency of the world and stuff like that. But in order for that to happen, governments would have to give up power, and they're not going to do that. That isn't the nature of power. So.
Okay, so you have like a range going here in Bitcoin, A, B, C, D, E, and after E, you're looking for 61,000 or 100 grand. Where is that? That purple line, that arrow? Yeah.
Yeah. So basically, there's a couple of ideas here. One is that maybe Bitcoin was done with this wave 4 down over here, and this is wave 1 of 5, wave 2 pullback. Other idea, maybe there's a sort of flat going on here. So 4 is here. And the other one, of course, is this triangle idea, which says, okay, well, we've got to get 3 more up for D, 3 more down for E, and then we get up. And so this just becomes a pattern target based on the height of the triangle pattern here.
Okay.
But, if it comes to fruition that we're going to head up higher here, Bitcoin historically every time has got some sort of blow off top. So, I could see it definitely extending well beyond that.
Okay. All right. So I do remember you were bullish once Dixie got over 91. If you want to go to the precious metals first, Chris, we could do that.
Yeah. Let me see here. Let's see here. So let me jump in silver here first. So I've got this. Let me kind of zoom out here a bit. Along with the, gold, everybody hates me because of my gold and my silver looks here, but it's the idea that we've got within an ABC, we've got B up here, we've got C coming down. So now within C, we need 5 waves. So we've got a 1 here as a leading diagonal. We've got an ABC as a flat for wave 2, which, if you look here, it's just right here above that R1 pivot right here at this high volume node on the daily.
Yeah.
So, everything else aside, just coming in sideways between the pivot and the R1, usually we expect a rejection of the R1 and a retest of the pivot. And if you lose that pivot, you got one more chance at the S1. If you lose that in this particular type of scenario, just playing pivots, usually it means you run down.
Yeah.
But I've got
How
this
about
here.
to your support 2 level?
Yeah. So you just break on down and you run on down at least to the S3, usually the S5.
Oh, really? Okay.
Yeah. If you're trading pivots, and so if we look at this as the count, which it seems to be so far, again, only hitting the 61.8 retracement. That's all we've done. Everybody getting real excited about this sudden thrust here. And so we get that breakdown and come on down. And, that ends up getting us down here from where we're at. 5 waves down gets us around $8.
Wow.
Yeah.
I was thinking it'd be a great buying opportunity if they ever flush the 2130 bulls, at 19 or so, like a bear trap.
See, and that's that whole thing. That's that whole area there. But once you're getting down below there, I think you really just open it up for that move down.
Okay.
And so and that kind
I did notice, Chris, the silver shares way underperformed the gold shares.
Yes.
The miners.
Yeah. Okay. Go ahead.
No, go ahead.
Oh, no, I was just gonna say, there's been, I think for people just in general, this last year, 2 years or so, I think it's really, everything's going on is really just flipping people around because things they thought that would happen in a certain way have proven that it doesn't really. It's like, the Fed used to think that there was a certain correlation with unemployment and interest rates. And, they found out, hey, coming into 2020, 2021, and they found out that isn't true, right? So, decades of policy that they use based on that no longer works, right? And so we get into the market here where everybody kind of believes that, they get gold's supposed to, and I think a lot of that is that, this idea that gold's some kind of safe haven. Again, I've said this before, I don't believe that. I think gold is just a tradable asset like anything else. And so, because here's the thing, you've been printing all this money more recently here since since March of 2020.
Yeah, and we're not over 2,100. Is that your point?
Yeah. We had that. And so let me see here. What is that? March of 2020. That's way over here.
Yeah. You shoved silver up.
Oh God, what is it? Right in this area here. And of course, gold and everything went down and then it rallied up here. And we're kind of just at that same area we were, 2011, that all-time high kind of area, not doing anything at the moment. So now there's always the possibility that this count is wrong, that is a bit more bullish, in which case, with silver and gold, you're going to have that higher. I can't say it definitely is going to go down lower, but the reality of it is for right now, we've only retraced 61.8, and that's Fibonacci, golden zone right there.
Yeah, and you have 90% bulls now. So
Yeah.
at the minimum, a pullback, recovery,
At
a
least.
sell-off, a correction from
Yeah,
these
at
levels.
least. I think you start looking lower, when you're dropping down, when you kind of get down here toward these lows down here, that 22 area, 21.5. I think
Yeah.
if you're losing that, especially if you're losing it impulsively, you're getting some large candle spreads, some expanding volume. I think then you get worried that maybe that top, really might be up there, and we are headed down toward that potentially $8 area. But
Okay.
until it does anything different, I mean, there's no reason for me to change what I'm looking at. It all fits very easily. So I continue to look at it this way.
And the gold?
And so gold, again, same kind of idea here. Though it did rally more.
Yeah.
But right here, just 78.6 is where we're at. Again, same idea. You've got this leading diagonal coming in 1. You've got a flat correction coming in 2, and you head on down there. Again, and this is the idea that we've got this huge flag going on. This being wave B up here, and this being 1, 2 of C. So you're heading down 5 waves down in C. So you're potentially looking at $1,000.
Wow.
I mean, this candle looks awful today right here.
Yeah. Yeah, I think, yeah. So great day to have you on. The dollar too, euro taking it on the chin. I forgot what your dollar target was. Are you in the plus 100 camp?
Oh,
from
yeah.
a long time ago?
Yeah,
You're
yeah.
like 110.
Yeah, and potentially even higher. Yeah. Again, this is something that I've been talking to you about, for a while there. And so if we get this here, I mean, this was the lowdown here. This was the beginning of that first week in 2021.
Right.
And I made my case for the idea that the bottom may be in here, including things like, usually the currency is going to reverse at the beginning of the year.
Yeah.
And whatnot, got a lot of flack, a lot of fighting about it. And here we are, way up here.
Now you have a lot of company.
Yeah, but then that becomes worrisome, when everybody starts agreeing, all of a sudden it's like, well, okay, are we ready for some kind of pullback?
Well, I know this is a bit above 61.8 to after Friday's action. Like the same comparison you made in silver. Right, I don't know if it got to 78.6, but why can't this be like the silver chart? What's the difference between this retracement that we're looking at here in the dollar and the retracement we're getting in silver?
Well, if we zoom on out here, let me zoom out here a little bit. You know what? Let me stick with that daily there. I've got a larger count here. There we go. That's what I'm going. It's on the monthly here. So this is kind of what I'm looking at coming off these lows back here in April of 2008. So back there during the GFC.
Yeah.
And so I've got this just as a 3-4 here. We still got a wave 5 to go. And of that, we've got a 1 with a flat correction and a 2. And so here we coming up. And so, if we're breaking out above here, that says we've got 1, 2, 3 heading up. And so that gives us a 5 up here around 114.75. But I think if we're looking at the really interesting thing on that is, you've got this nice clean channel here. That takes us out of that channel.
Yeah.
And so the scary thing I think about that is
that 25, 35, 30-point channel or something like that.
50.
50. Okay.
Yeah.
Takes you to 150.
Yeah. If it follows that pattern target exactly. So, I think, you still got to look for the breakout. I think really kind of above this swing high over here in July of 2001. But breaking out of that descending resistance there, I think is really should have people's attention if that is to happen.
Okay.
Yeah.
Interesting.
So you get your 1, 2 and head on up.
So the stock market rolled over, Chris, and the debate is on the invasion day, the S&P's reversed, and they've really held up well amidst, parabolic move in crude, etc. So could that low have been the completion of 4 and we still have a 5 to go to the upside in S&Ps?
Oh man, it could be. I think it's the chart
I
right
could
here.
tell by your old man that You don't think so?
Well, no. I mean,
Oh.
it's possible. It hasn't come down enough. You know, it hasn't give you that larger count, confirmation
Flush.
that you look for yet.
Yeah.
I
So you
think
have it as a 4 there.
well, no, this is that in case it's going to go up one more. This is kind of like
All
that
right.
alternate count.
All right. It's
Because you
alternate.
asked about that, right? And so,
Yeah.
I think, when you look at the fact that we've kind of moved in here again sideways between that pivot and that R1, this is on the weekly here, and we found support at that pivot. I think you have to keep an open mind to a potential, one more wave up.
Yeah.
So, if we get that break out there, then, I think we're looking at that R1 pivot area.
Okay.
Now that doesn't have to happen, but
That's
I
your
think,
first
the
count.
fact that
This
it
is your
bounced here-
alternate.
Say it again.
This is your alternate. What's your preferred?
Yeah. Well, the preferred is over here, and this says, okay, well, we topped out back over here. Let's see, up over here in the beginning of January.
Yeah.
All the way there, up there. And so from here, I've got a 1, 2, and then a 1, 2 here. And so, for right now, we've got this like a leading diagonal here, and then we've got 1 of 3 starting here. We're rallied up to the 70.5 in 3 waves. So you got A, B, C potentially. So, I mean, unless we break out above this 43.37 up here, I think we kind of come down. Now, again, we're bouncing off the S1. So if we break out above that pivot, that should be most likely good to go and head up. And again, I think we'll start looking at that other count potentially. But if we reject this pivot and we come all back down, I think there's a real good chance that tops in.
Okay. Oil. Did that
Oil,
surprise
man,
you?
everybody loving oil right now, right? Unless you're trying to drive.
So
anywhere.
I know you're looking for a top here. Says 5.
Yeah.
Was this 5 today?
I think so. I think it might be. So we've got these marks here, these significant levels that I'm looking for to break through to gain more and more confidence. But again, like gold there, absolutely ugly candle right here. In terms of pivots, again, pivots was something. See, the reason I keep talking about pivots is something I did for just a few years on its own. And so things I've learned is if you come in sideways between the pivot and the R1 right here, and you don't get the rejection and that retest the pivot, you just fire on up to the R2 or R3. Usually it means you're going to run to R5, and then that'll be the end of it. It's usually a pretty bullish last move. And so here we are, basically have done that, right? We came right in, run up the R2, kind of sideways, R3 back, and then just boom, popped up to R5. So I think there's a good chance that top may be in there. And here's the thing, if it is, I mean, some people are kind of, this and that about it, but I mean, man, we've been rallying since that negative print in May of 2020. Yeah. I mean, that's a few years, man. You got to pull back at some point.
But you know what? It does give you support for your deflation idea because of how it's such a huge tax on everybody right
exactly
now.
Yeah, exactly.
Draining liquidity away,
right.
So unless there's a nuke or something, it's sure a tough short. I use ETFs when I try and do this, so I don't get blown out overnight, but it's a tough trade. Anything else on that you're looking at that you'd like to share with us?
Well,
Chris?
I'll tell you what, so I watch one of my favorite charts is the TLT junk chart. Okay. And so where you got those long-term government securities paired up against your corporate bonds there.
Oh, corporate.
And
you mean junk like HYG? Only
your corporate debt, your junk.
Okay.
Junk bonds.
LQD is corporate.
Right.
Okay.
So
all right.
What we look for with this is the idea generally being that if we're rallying, it's a risk off market because people are going from J&K to TLT, right? So they're going for that short term,
higher yields.
More risky debt. You're going or the bonds there to the long-term safe government kind of stuff. Right. And so, you had that run up here. This was that when the markets were all dropping down into March of 2020, and you can see how we ran up here. Everybody was scared. Everybody went in that long term, right?
Right.
And then after that, we end up, recovering off that. And so your S&P and everything kind of goes up. and you see that movement from TLT back to that riskier junk, right?
Yeah.
But that creates this wedge here. We find this support right on this support resistance area right here. And we've just kind of continued moving up since then. You can see that we caught a lot of volume at the bottom in this area here, showing us that demand has really showed up here. And, it did flip the script there. And so with here, I've got this rallying up here on this wave circle 3 up here at around 1.63. And again, if this is going up, that in general means that people are more fearful and they're not going to be putting a ton of money comparatively, back into the stock market. So if this is playing out, then, again, the whole idea that we're probably topped out, I think makes a lot of sense.
Okay. That's interesting.
Yeah.
Over
yeah,
junk.
so.
Okay. So those, I know a lot of people look at those yield spreads between junk and, to get an idea of risk and systemic risk and things like that. That's a very interesting chart. So tell me what's new at Texas West Capital. I know you probably have about 1 million projects since I last talked to you.
Man, it's always something. We got a few things in the works right now that we're hoping to be releasing here in the next few months. Just other than that, I mean, really just trying to keep everybody from from
freaking
jumping
out
into that emotional train as they're trading the charts,
Yeah. Yeah. Well, I tell you what, it was really great to see your charts. I missed them. So, really appreciate you taking the time. You could follow Chris at TX West Capital. And is that also the name of the website would be TexasWestCapital.com. Any newsletter or where people could try you out?
Yeah, as a matter of fact, I do. If people
Why don't you show your website? On
Twitter, I've got it loaded up there.
Okay.
We're going to relaunch that here in the next few weeks. And so, and that's really just a lot more of the macro explanation of what's going on, macroeconomics, global financial policy, stuff like that, helping people just kind of get on board with it. Because a lot of people are coming in today, real interested in the markets and they have no real clue what these other things mean. So hopefully just to help them get a grasp of what's going on out there.
Yeah. Don't tell them not to trade live if they're starting.
Say that again?
For a while. Anyway, these okay, I want to wrap it with this. Do you have more of a propensity since the war started to take winners off earlier? Are you finding it more difficult to hold positions?
Well, I'll tell you what, I've always been a big believer in consistently locking in profits. Otherwise you're just kind of emotional and you're like, oh, it's going to go higher. It's going to go higher. And it rarely does. Right. So I've always been on that boat anyway.
Okay.
I don't know that I'm necessarily more so now, but I would definitely, suggest anybody's in there that's what it is. Let time and compounding do the rest. Right.
That's it. Christopher Inks, everybody.
I appreciate you, Dale.
Master Elliott Wave artist. Great to have you, Chris.
Thanks, Dale.
We'll keep you in the rotation, buddy. Good hunting, and I'm rooting for you and all your people.
I appreciate it, buddy.
Okay. So that's a wrap, everyone. I'll see you for Turnaround Tuesday, and you could join the crew on the Morning Edge in 19 minutes. Don't just count your pips, count your blessings. See everyone tomorrow. See you, Alexander. Thanks again, Chris.
Thanks, Dale.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.